Welcome to Wick Crypto. Don't forget to subscribe and like it. Enjoy watching. Cure for inflation, crypto? The world is becoming increasingly volatile and uncertain. The assertion that inflation is a silent thief is becoming less valid. In 2021, inflation has turned into a rather noisy and insolent robber. Now, inflation is at its highest level in 4 decades. In Europe it has already exceeded 5%, and in the United States it has reached 7.5%. The conflict between Russia and Ukraine December affecting the futures of gold, wheat, oil, palladium, and other commodities. High inflation in the US and Europe has already become a real threat to the capital of tens of thousands of private investors around the world. At a meeting of the Federal Open Market Committee, FOMC, the chairman of the Federal Reserve, Jerome Powell, said that he would recommend a cautious increase in interest rates. At the same time, Powell noted that he expects that the crisis in Eastern Europe will not only result in an increase in oil, gas, and other commodity prices, but will also increase inflation. Powell also openly reaffirmed his determination to raise the rate as much as necessary, even if it would cause a recession. To recover crypto. Many investors are looking for ways to protect their savings from inflation using cryptocurrencies. Chad Steinglass, head of trading at CROSSTOWER, is skeptical about cryptocurrencies as a defensive asset. Steinglass commented to Cointelegraph that it is important to remember that crypto is still a young asset and trades more like a speculative asset than a defensive one. Indeed, cryptocurrencies differ from fiat currencies in terms of their volatility. Even Bitcoin and Ether, the most stable cryptocurrencies that attract a lot of attention from institutional investors, can rise and fall by tens of % within a day. Of course, there are more and more use cases for Bitcoin every day, and it serves as a base layer for the alternative financial system that is already emerging. In the long run, this trend will develop, which will not only increase the price of Bitcoin, but also lead to a gradual decrease in its volatility. To protect money from inflation, investors buy gold, cash, or real estate. Speaking to Cointelegraph, Paolo Ardoino, chief technology officer of the crypto exchange Bitfinex, compared Bitcoin to gold. Especially crypto and Bitcoin have unique characteristics and are a form of digital gold. In particular, the central bank has shown that it performs well when the value of money is reduced by incentive methods. This, of course, is one of the main purposes of Bitcoin, to protect people from this phenomenon. Jeff Mai, director of global strategy at digital asset platform Huobi Global, also shares this view. Mai said that Bitcoin is a great protection against inflation because there are only 21 million Bitcoins after they are all mined. Derivatives or not. Investors often use derivatives in traditional financial markets to protect savings from inflation. Rachel Lin, co-founder and CEO of the trading platform SYNFUTURES, said that by using derivatives such as Bitcoin futures, investors can be exposed to BTC with much less capital and limit potential losses. However, Ardoino does not recommend that investors use crypto derivatives for this purpose. He considers it more appropriate to have direct exposure to Bitcoin, which he calls the king of crypto. Mai, in addition to Bitcoin, October Ether as one of the most stable digital assets. According to Cointelegraph, he thought that Ethereum's competitors such as Polkadot, Terra, and Solana could also be seen as a store of value. Lin pointed out that if investors are just looking for a way to generate fixed income, they can convert their fiat money into crypto and deposit it on some of the larger central finance platforms or blue-chip decentralized finance protocols. Potentially, this gives a much higher return than when depositing money in a bank. Steinglass remains skeptical about comparing cryptocurrencies to the dollar in the current situation, where the conflict in Eastern Europe has caused the USD to depreciate relative to many other currencies as people strive for stability. For the time being, dollar demand has outstripped the fear of inflation. Steinglass added, on the one hand, cryptocurrencies are an element of an alternative monetary system and a sorely needed store of value, and on the other hand, they remain a risk asset at a time when investors around the world are reducing risk. Is the answer in gold? None of the experts that Cointelegraph interviewed mentioned gold-backed hard currencies such as PAX gold as the preferred defensive asset. But historically, gold has been a traditional tool used to protect capital during periods of financial turmoil. Gold constantly increases its price over time. During 2021, the price of December ounce of gold was between $1,700 and $1,950. In 2022, it rose to $2,050 per ounce. Institutional investors are showing an increasing interest in gold-based hard currencies, but the same cannot be said for the younger generation of retail investors. Perhaps the main problem with gold-based hard currencies as a measure against inflation is not technology, but ideology. For many crypto people, both fiat currencies and assets such as gold represent outdated values. It is clear that in 2022, inflation will remain a threat to investor capital, and the crypto industry has not yet found an answer to the question of combating this silent thief. Don't forget to write your thoughts in the comment section, subscribe and like it. Stay healthy.